I know you said that we ain't crossed this threshold of 720, but how you feel about these markets though? We gotta. This is a very particular week, right? It's very right. This week has been crazy, and like a little bit of last week. But how you feeling about these markets, man? We everything's down right now. Like it's red. Look at it. It's a bleeding day, except for SoFi. Shout out SoFi. You know what's up with SoFi, but
market is just consolidating and having a breather.
Yes. Okay.
Right.
Fair.
That's exactly what happens. You clearly see that market has run up on the SPY from March 26th to where we are now. Let me get that. What's that? The percentage? About 20%. You run up 20%. That's why we zoom out and look at the daily chart. And now that we're here, we're at 731. So if you run up 20%, and what did you from where we are now, from the 20% run up, you're still up 16%. So the headlines and the way the market is moving lately is going to make it always seem and feel like it's worse than what it really is. That's why you got to zoom out. Because, in my opinion, market is just consolidating and having a breather after they just ran up continuously like crazy since March. And honestly, markets is red, and it'll cause you to think that, oh, panic, you know, whatever. But it's pretty typical, man. You know what I'm saying? Another thing, too, is like, you know, like we talked about the data, the markets don't like to stay down, right? So until, just like any other time, you know, I'm still thinking that we're going to have this breather, run back up, whatever it is, until proven otherwise. But, you know, I don't think there's any room to panic. What you think?
Nah, likewise, I don't think that it's definitely a time to panic. I look at these as opportunities anyway, so there wouldn't even be no type of panic. And really in the market, the only emotional part is when you see how much money you got in your account, and then you see how much money your investment costs. And that right there that's where all the emotions is, because this is something that you can't necessarily control, especially if you so minimizing your risk and putting forth the right type of strategy when it comes to getting into investments. That's really the only emotional state for me when it comes to putting the money into the investment, because this is gonna happen. These things happen. That's kind of uncontrollable, especially when we got Trump talking about some just admitting to inside trading and things like that. You know what I'm saying? Mm-hmm. We got Trump doing stuff like that, so there's really nothing that you could do except for get in and, you know, ride those waves.
And that's
grab a surfboard, man, skateboard, whatever.
That's it, man. Like we talk about, it moves in cycles, and you gotta be able to benefit from, understand the cycles, so you don't get faked out. So you can benefit from. I just saw some news. Nvidia at 197. Nvidia been having a little downtrend. Nvidia said China data center H2 shipments were $0 this quarter versus $4.6 billion a year ago.
That's crazy.
Quarter two revenue guidance excludes China data center sales. China data center business reset and risk classified. Nvidia unveiled the Vera Rubin, I don't even know what that is, aimed at scientific supercomputing workloads. 2026 free cash flow is near 95.4 billion, implying over 97 billion will be available for shareholders. Hey, Nvidia is another great stock too that you need to be copying, man. That's something that's in my portfolio that I believe in for sure. All-time high at 236. Right now we're testing that support of 194. It's at a prime level. Get that below 200 because it's gonna be 300. This is exactly how you got to think, man. You see it in real time. You know, something that happened today, too? Wendy's ended up going crazy parabolic, right? So Wendy's ended up saying, hey, we're getting a new CEO from Potbelly, and it shoots up 30%. But also, it's a meme stock that they've been talking about on Reddit. So they all said, hey, we're going to save Wendy's. Let's all get together and save Wendy's. So it ended up overnight going from that low to this high, 46%. Man. That happens, man. The meme stocks happen, man.
$6. Crazy.
These are the stocks that you don't want to invest in. Look at this chart. These are the charts that you don't like, right? You know Wendy's.
Woo!
We all know what Wendy's is. Their low is all the way down here at $5.34.
What happened here from us to go from $5.34 to $22? That is insane. They came out with the biggie bag. It's 2020.
I don't know, man.
What is that? The $5? That's crazy.
But now Wendy's is it's a classic example of you don't always want to invest into popular companies because they're not always popular. I mean, not always profitable. You know what I'm saying? Wendy's is making some money, but they're kind of just staying afloat compared to like McDonald's. You know, one of the things that I have learned recently is that McDonald's ended up saying that once beef prices got more expensive, they said we're just going to add more chicken to our menu, and we're just going to sell more chicken because chicken is more cheaper to get. The profits are bigger on chicken. So they're able to stay afloat, and they own the land, most of the land of where they have their locations at. They got a lot of cash flow. You know, that's a whole completely different business model than Wendy's. You know, Wendy's, I recently found out that their slogan is, or they base their business model off of the fresh beef.
Yeah.
And the beef is hella expensive right now, so you know they can't really pivot and make those moves McDonald's can. So, prime example of, hey, Wendy shot up 46%. Sometimes crazy stuff happens in the market. Meme stocks happen. People will do that. But these are the stocks you want to stay away from, for one. And then for two, every company that you see and know of is not always doing well in the stock market. Like another company, Nike, has recently hit the lowest of the low. It's still low. Damn. Nike's disappointed me, man. I had walked in there the other week, and they're kind of still beating their. So what's killing them too is when the tariffs started, they got to pay $1 billion. I think they got to pay like a lot of their profits in the tariffs because their shit gets made in China, and they just Nike's not eating, man. They are not eating. They're at a low of $41 from its all-time high. It is a 200% decrease.
283.
300% decrease. I mean,
it's devastating.
It's devastating because Nike, you still walk in there today. They still got the nice looking store. They still got the nice quality stuff. Hopefully, they can turn it around. One of these days, I'll look at their financials and really dig into the company because it's at a low. You know, if they turn around, this is where you want to buy. You know what I'm saying? Because I walked in the store, the Nike store the other day, I still get that, they get that futuristic vibe. Nike's, you know, I feel like they're going into that futuristic sportswear and really doubling down on that because there's a lot of stuff that you can get on Nike that you can't get nowhere else, man. But another prime example of a great company that we see every day, but you don't always want to invest in those companies. It's important that you look at those financials.